Now, in the last 18-year cycle, we've seen all sorts of change come into the way we work, whether it's Wi-Fi, whether it's the iPhone. The iPhone, believe it or not, is, it's like 17 years old or something like that. But it changed the game. It changed how you could work, where you could work. It could change how easily you could contact someone, that you could send an email from, sitting on the ferry. So that created with it innovation, and innovation created with it a new cost structure. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. Today's show, we're going to dig into AI. Yes, can AI actually replace us all? Will I be replaced by a robot? Are you able to use powerful AI today to spot a cracking property investment? And will we all end up receiving a universal income from Amazon to basically buy their stuff, because none of us have jobs and we're all wearing toga outfits, swirling wine, working maybe one day a week while robots do everything? That's today's show. Does that sound riveting? I hope so. Well, welcome back, regulars. Play the show in double speed, get your life back. And of course, all the episodes I've done are lessons on real estate. But hey, here's my book. It's called The Australian Property Game, and it's actually for sale on Amazon. Yes, I now work for Amazon, making them money because I get $1 a book. So if you'd like to make me wealthy by buying a book off Jeff Bezos and sharing your dollar with me, I would be very grateful. But it's a good book. It's lots of stuff in there, and I hope it's making a difference to the way you understand real estate. A big part of my job is simply understanding real estate, market trends, market behaviors, and what next for society so that we can all make some pretty good informed decisions. Now, interesting enough, when I did the book with Amazon, I had a choice to go with a publisher or just self-publish with Amazon. It was much cheaper. Innovation creates certainly an ability to do things for less. In fact, I am now turning the book into an audio book, and I got some quotes from some actors who can do voiceover work and basically, read the book. There's 13 hours to read. I can't do that. I can't read a text message, let alone read a 13-hour book. And the quote was big. It was like $6,500. So I went on to AI, found an app, and the app can clone my voice and read my book for $127. So there's a lot of lessons there, because the beautiful thing about the future is productivity, and innovation is actually quite often deflationary. Things are done quicker, faster, and better for less. And of course, with a rising cost of living, could innovation actually help us be more productive and actually make more money into the future? Because some of the elements of AI are certainly allowing us to be a lot more productive than ever before. And of course, can we be more productive in the real estate world? Can we find better intel to create better decisions around evidence on how to invest in real estate? So I think it's a worthy conversation. I actually got a tag on this one from one of our avid listeners. Could we actually do a show on AI? And of course, what that actually means, because we are living in what I would call the fifth industrial economy. And really, when you think about past eras of innovation, there's been some great ones. We've gone through really leaving a rural economy into the first industrial revolution, where, we went into the steam engine and we were powered by all sorts of innovation. We've gone as human beings from harpooning whales to lighting streets to creating electricity and doing it a different way. I really think the next phase of innovation with things like blockchain tech, AI, robotics, is really just a new wave of productivity and innovation and a new way to do things faster, better, and cheaper. And of course, we are going to go into a phase of agentic AI where effectively the robots can start to think for themselves and really start to solve problems and rewrite the way things work. And of course, that's going to be a bit of a game changer for all of us. And we've all got to be on our toes, just like the method actor who could read my book now potentially needs to do something else with their life. I think we're all prone to maybe resting on our laurels too much. And I think it's really upon us all to work out how to upgrade our life. And I think real estate investment is a great hedge with really the middle class pivot, which will unfold due to the advancements in AI. And I think for a lot of people who embrace it, they will do really, really well out of the new productivity that AI brings with it. And of course, those people that, refuse to use it or don't believe in it or think it's a fad, may just be left behind. But of course, real estate plays a pivotal role whenever there is innovation inside of the world, because real estate is a pricing power asset. And I love that about it. With food, energy, they're pricing power assets. You can't live without food and water. You can't live without energy on this planet, and you can't live without shelter. The beautiful thing about real estate, it's a hedge against a future change in society, but also will be the beneficiary of those changes. Now, there is a concept known as the 18-year property cycle, which is a great concept. It really is the transformation of macroeconomics. The idea that every 2 decades, things change so much that really we enter a new phase of what people can earn for a living, what people can take home work-wise, and what we're worth as human beings. Really, every 2 decades, we're all worth more to the marketplace by virtue of industrial change. In other words, it's not really the productive means of most of us that create change. We just simply wake up every day and change is around us, and we get to use that change to benefit ourselves and our lives. Now, in the last 18-year cycle, we've seen all sorts of change come into the way we work, whether it's Wi-Fi, whether it's the iPhone. The iPhone, believe it or not, is, it's like 17 years old or something like that. But it changed the game. It changed how you could work, where you could work. It could change how easily you could contact someone, that you could send an email from, sitting on the ferry. So that created with it innovation, and innovation created with it a new cost structure. Less money was going to, like certain things which can be redeployed into wages. And really, we're living through one of those conversations at the moment where, for example, digitally, a lot of us can work from home, we can work from anywhere. All we need is really good internet connection and Zoom, and we're away. And of course, that innovation has downward pressure on, for example, office rents. And really one of the sectors which has not been, favorable is the office market inside of our society. There's been winners and losers. Conversely, there's all sorts of winners in commercial property, from commercial warehousing to residential properties, been a winner when it comes to really the digital boom we're going through. And really the idea of geo lifestyle arbitrage is the winner. Beautiful beaches an hour out of a city are now hotspots because people can work 2 days in the city and work 3 days from home. So innovation is always going to be a thing. And really the future of innovation and the fact that we can all earn more money potentially from AI is exciting to me. And I think the next 20 years is going to be, a pretty critical junction in a lot of people's lives when it comes to how they embrace technology and how they use this innovation to make their life easier, but equally make more money from certainly the AI available in the world. Now, I think we're all getting used to things like ChatGPT, where, it really does know the answers to everything. It is smarter than your friend Bob, which is quite exciting, Now, I recently went to a real estate conference on the Gold Coast. ARIC, it's a pretty famous conference. There's a lot of great presenters actually that went to that conference, and probably the most notable was Kamala Harris, the ex-vice president of the United States of America, very powerful woman. Kamala was quite good to listen to, I have to say. I wasn't really into Kamala, but then I got to hear her talk in the flesh, and she was a very, very intelligent human being. And of course, she was asked, about the idea of the transformation of robotics, blockchain tech, AI, agentic AI. And she did sort of allude to the fact that certainly for a lot of people in society, they will, need to rethink what they do for a living, and make sure they're constantly learning, because what is constant in this world is constantly changing. And I guess we have to adopt the mentality that we want these problems, and we're going to be part of certainly the problems themselves to come out the other side. We don't want to shy away from this stuff. We don't want to stop investing because ChatGPT can, give us some good insights on, Bitcoin. We don't want to stop investing. We want to actually embrace this stuff, and we want to live in a world where certainly we've got assets protecting us, and we're always pivoting. I call it the middle class pivot. You've got to pivot into assets because let's say the next 20 years, you want those assets to replace your income. So you need to get it done. You need to buy the problem of real estate, because your true problems are bigger than just getting some real estate and holding on to it for 20 years. You want to educate yourself and upgrade your world constantly. You want to listen to the webinars, you want to go to the seminars, you want to re-enroll in education to have multiple skills. But equally, you want to use the digital world to your advantage, because certainly when I first got into the workforce, it was very difficult to have a part-time job on the side, a side hustle. But today it is simple. You can have online stores, you can have, followings on Facebook, you can have Instagram accounts where people, follow what you do and your thought leadership around a topic. So never in the history of the world has it been more, in my opinion, easier to make money. And it's going to get even easier as we go into the next wave of an industrial revolution. We're actually going to find ourselves in a place where potentially there is money freed up that can come to our back pocket because AI will do it faster, cheaper, and better, creating deflation on certain sectors of the economy. Obviously, we don't want skill obsolete. We don't want to be obsolete from our skill. And we certainly want to make sure we're always learning. But again, like, this is where we have to go. We want to be on the right side of any future industrial change as opposed to the wrong side, and just make sure that we're doing what we can when it comes to, shoring up our future. The same wind blows on us all, and that's the reality of it. We're all in the same world, and we're all going to face the same headwinds. It's just those who tackle it with gusto that seem to do really, really well in this world. So when it comes to real estate, though, I think, right now some of the AI tools in the industry are just second to none. I came from buying investments. You literally got a newspaper, you read the newspaper, you rang the real estate agent, you got in the car, you went and saw the property, you looked in the shop window. That's really, I go back that far to that vintage. Today, you can do market research, deal discovery, feasibilities, rental cash flows, risk monitoring and optimization, or using AI tools from the comfort of your home without leaving your home to narrow down what you actually physically want to go and see. I think, the beautiful thing about current tools available in the property investment space is they do free up a lot of time. And of course, they'll analyze all sorts of things: interest in real estate, days on markets, gross rental returns, vendor discounting, stock on market in the local area, noise risk in the local area, flood risk, bushfire risk. There's so much that today the right platforms are doing and putting into your fingertips straight away that can help you choose a much better asset. There are AI tools for capital growth strategies. There are AI tools for cash flow strategies. There are AI tools for doing developments, and really even working out feasibilities inside of developments. Today you can use a tool such as Archistar for feasibilities on developments, for site analysis. You can use Land Checker, which is one of my favorites, to work out what development applications are happening in an area. You can use microburbs. You can use CoreLogic, Cordels. Cordels is something we invest in heavily. It tracks development applications, where they are, how big they are, when they're coming to market, if they're in sales and marketing, if they're in construction. So ultimately, there's a lot of workflow automation when it comes to AI available for property investors. The challenge for property investors is, do they want to pay for the AI? And this becomes another sort of deeper conversation. If you're a professional property investor like myself, you can't go to work every day without AI. It's virtually impossible. You couldn't do what you need to do to look into the due diligence on real estate without Archistar, without Land Checker, without Price Finder, without microburbs, without CoreLogic, without Cordels. It's just not feasible. So, but again, a lot of that stuff costs a lot of money, and it costs a lot of money when you bundle it all together. And for a lot of buyers agency, investment agency firms, they're spending hundreds of thousands of dollars looking at research to sort of bring deals to market. So for someone at home, that can be a little bit more difficult to do. But certainly there's some great tools out there which are at a reasonable price, which means you could use AI to help you find a property in the marketplace, or certainly narrow down your choice of property that you're looking at. Now, I recently experimented with Chat GPT to find a top pick for property investment based on zoning. The idea that an area may be oversupplied with real estate, has favorable zoning when it comes to development, and an area which is a little bit more protected and has a little bit more going for it. And I asked ChatGPT to compare some suburbs that I was looking at to see what the results would look like. I compared Chadstone. These are Melbourne suburbs. I compared Chadstone to Burwood, Ashwood, Box Hill, Ashburton, and Mount Waverley. And really, I asked it around, when it comes to things like zoning, housing commission, future land use. I asked a series of questions, and I asked it to sort of rate the least strategic place to invest with the most strategic place to invest for a buy and hold renovation strategy. That was the I guess conversation I started with ChatGPT. And interesting, it came back with some pretty good data points. It said Chadstone's very much less strategic. You would only touch it if you got a real entry-level property in that market. It analyzed Burwood to be also, you would have to choose very, very wisely, only in select pockets, meaning certain streets do well, certain streets don't do well. Ashwood, it said there's upside in large land lots in that marketplace. But again, you need to factor in some local factors, the street, the neighborhood. Box Hill, it kind of said buy very selectively because of the high oversupply of that neighborhood, which makes a lot of sense. Box Hill's got a lot of density. Ashburton, it labeled it as a strategic, stable, and prestigious market to buy in, and really a great lifestyle pick, and gave it a tick. It said Ashburton over Chadstone, Burwood, Ashwood, and Box Hill. And Mount Waverley, it also gave a massive tick with its school zone. Also, a favorable thing for long-term buy and hold. So do I agree with ChatGPT? Well, the short answer is I do. I think it did a great job at understanding some of the variabilities of those suburbs. And of course, I think its data was accurate. I think if you were making a decision based on the input into ChatGPT, as per what I said, I would be looking for a renovation project in Mount Waverley or Ashburton over Chadstone or Burwood. So again, the idea that there's sort of a master set of tools, a tool stack, a tech stack that property investors should have is paramount to today's property investment marketplace. And again, there's all sorts of research tools, from suburb trends to feasibility tools such as Archistar, or desktop valuations with things like CoreLogic. But equally, there are some great tools now in property management, which again, sophisticated property management outfits have, which allow you to look at a property and even forecast when the inclusions in the property need to be changed. There's technology today where you can go into a home with a camera. The camera will do some rapid fire photography of the home, and it'll give you an estimate as to when a certain section of that home needs to be replaced, whether it's the dishwasher, whether it's the curtains, whether it's the stove. It'll actually factor into a cash flow that you're going to replace that stove in 2035 because it's not going to make it past that date, and you're going to need to factor that into your future capital expenditure. So these tools are immaculate, and they're only going to get better. They're only going to get better. So it begs the question, if there's so many great tools out there, do we really even need human beings to be part of this puzzle? Human beings are complex. Human beings have a lot of biases. There are so many people I speak to that, they've got preconceived biases that they don't even know where they came from. And their biases like, you never buy new. Okay, well, where does that bias come from? You never buy old unless you can just renovate it. You never buy an apartment. You never buy a villa. You never buy, X, Y, Z. And of course, some of it can be validated, but not all of it is effectively true. And again, this is where just human experiences come into play. We call that behavioral finance, and we all go through different ways of seeing things throughout our life, and you create a behavioral diagnosis from how you feel or see something. Now, again, I'll give you a perfect example. My parents put money into the stock exchange in 2007. Quite a lot of money, actually, they put into it, were advised to do it. And there was a period of time there where the government had some tax relief if you basically moved money into the share market out of basically pension funds. Anyway, long story short, a year later, basically the stock market crashed along with the global market off the GFC. They lost a lot of money on paper and decided a year after the loss after there was a rally, to get their money out of the share market. They ended up losing not the whole amount, but they certainly dusted about 25% of their wealth by getting out and getting off the roller coaster a year after the stock market had crashed. Now, if you ask them to invest in stocks today, what do you think the answer is going to be? They're going to go, the stock market, no way. You only lose money on the stock market. Interesting enough, one of the best performing assets has been the United States stock market. It's outperformed the Australian real estate market by about 60%. So the right stock market, the right stocks, actually you could have done really, really well since the GFC. Actually, absolutely made a fortune. But again, that human bias of, and I had an experience, so that doesn't work, is really the challenge with human beings. So should we go out and use robots? Should robots be our investment strategy? And of course, robo-invest is a real thing. Now, in America, an AI firm began buying real estate using AI to choose and pick the real estate. And it was a prop tech kind of concept, and it was called Zillow. And Zillow went around America buying hundreds of millions of dollars of real estate. Zillow effectively launched its AI-powered home buying program. And basically, people put money into a bit of an index, and Zillow went off and through its iBuy network used algorithms to estimate homes and try and buy them and flip them to make a profit in the middle. And it was built around this kind of Zillow Zestimate model, which was basically a combination of algorithms, AI, and human input into effectively what to choose to buy and when to choose to sell. And the challenge with it was the AI constantly overestimated home prices. And Zillow effectively paid way too much for the real estate. And it didn't factor in volatility. It didn't factor in that things can happen overnight. Things like COVID can happen. And all of a sudden, that algorithm of a robot buying real estate effectively imploded. It imploded because of all sorts of things. The renovations it chose to renovate, then there was cost overruns, there was delays, there was supply chain issues, there was issues getting builders. The human side of real estate kind of came into being, and really the algorithm of Zillow just couldn't solve it. And eventually Zillow shut its program, lost like $250 million, and no one's ever tried it since. There has been no one to try buying actual pieces of real estate just using technology to choose it without a human involved since then. And of course, there is some obviously, thoughts around that. Despite there being some great AI tools, real estate as well is a very humanistic kind of a concept, because great investments are driven around lifestyle, where people want to live. And quite often price is very reflective of people's emotional state around real estate. Really, you could sort of link it to the way we analyze the human brain. We've got a fast brain and a slow brain. The slow brain is human beings very, very strategic and logical and mathematical around a thing like an asset like real estate. They're very analytical. They're very slow to kind of make a decision. But equally, human beings can be very emotive. They can be instinctual. They can be quick to grab onto something that makes them feel good, that makes them feel right. And again, I teach that there is some fast brain concepts around property design theory that really make people go crazy over real estate and pay more for real estate. And in my 4X growth plan, I teach that there really are 4 ways growth works. The first way is, buying a property well. The second way is the location itself. The third is the market. And the fourth is this kind of emotional piece, which creates a situation where a property is just connecting the dots to a human being's story, something that is very difficult to unpack without actually walking in that human being's footsteps. And again, that's why you find a lot of people love real estate that maybe makes them feel good, has a really good view, is close to the beach. They can see their kids growing up in the real estate. The lifestyle impacts of the real estate is something that algorithms don't kind of factor. And Zillow never factored that part in. It factored in the analytical, logical, strategic kind of the maths here. This is a 6% return. This must be a good price. Let's buy it. But it didn't factor in the emotional state of real estate. So I guess, when we think about advice and we think about real estate, down the track, will you end up speaking to a robot to give you advice? If you took all of the information out of my book and you applied that to choosing real estate, and you put it into some, AI kind of, clone of me, you're probably going to get some very good advice. If you got the wisest property investment advisor out in the world, the best financial advisor in the world, and you kind of morphed it all together, you could probably get some very good advice down the track. And I guess if I was to compare what's in the market today compared to certain investment agencies and buyers agents, I do ask myself, is actually AI better than what's available today? So if I was to break it down, I think there's what I would refer to as purist buyers agents. They're very suburb centric. They don't like that anyone can invest outside of just 1 or 2 suburbs. And I think AI would find it hard to beat a very suburb-centric, purist, buyer's agent. Now, I was listening to a talk the other day around buyer's agents from a very experienced realtor, and he kind of alluded to, look, buyer's agents are great. They serve a purpose. They introduce people to a lot of real estate that would otherwise have no comprehension to. But in his viewpoint, a lot of buyer's agents are really the ones that pay the most for real estate. They don't get paid unless a transaction unfolds. So again, you've got to choose the right sort of agents, because a lot of people that don't make it in property sales today, who struggle with that, end up going straight into buyer's agency work because they have struggled in another part of the industry, end up just not doing a great job, but just getting deals done. What is fair to say, though, I think a good investment or buyer's agent can, introduce you to things you would otherwise not even contemplate. And that is the art form of that space. It's like, well, have you ever thought about XYZ neighborhood? No, I haven't. Okay, let me explain what's going on over there. But if we stick to, could AI beat a suburb-centric buyer's agent? I don't think so. Even though some of them will pay too much for localized real estate at times, I don't think so. Then there's what I would refer to as the sort of purist buyer's agent, renovator. They use the buy, renovate, rent, recycle model. They tend to shop in sort of blue chip suburbs, around that $1.5 million plus, $1.5 to $7 million range. Really what they're trying to do is find some real estate which has some future upside down the track, and eventually do a renovation on a property. Could AI beat that model? I think that model maybe not beats it. I think you could get a lot of intel out of the true cost of the renovation using some of the software available today to what replacement costs actually are. So I think that type of buyer's agent with the right AI tools combined together could be a real good winning formula into finding the right kind of property. And again, I just don't see an algorithm understanding whether you can knock down, the kitchen wall to create an open plan lounge, dining, kitchen. I just don't see it at this point. Maybe I'm just not being visionary enough and futuristic enough, but I think you'd probably find that AI would struggle to compete with that. Then, of course, there's the interstate buyer's agent that basically, has an office in Sydney but buys your property in, Adelaide or Rockhampton or something. Could Zillow beat, these are kind of the human Zillows, I call them. They really, basically what happens in the industry, which is a little bit disturbing, is selling agents have a list of properties they never think they could sell to a local, and they call them investment-only properties. They then have a pool of buyer's agents that they call and say, I've got a property coming to market. It's not going to work for the local market. Can I offer it to your investment database? And you can be the buyer's agent on it. The buyer's agent then has a look at the property, maybe does a bit of a haggle on it, and then offers it to its database and gets paid a fee. And really it's kind of, I call it the human Zillow, because this is kind of like a model where even the human being is letting you down, where they're not really analyzing the real estate well enough. They're just creating deal flow. You're the science experiment. And I think ultimately you'd probably do a better job actually just using AI and finding your own property than paying, $17,000, $18,000 for someone to basically, put you on a list of stock which can't sell at a local level. The stock that is in high demand is very difficult for a buyer's agent to get their hands on because there's multiple buyers for it. And again, that may mean you do need to pay the most to get it. But yeah, and if you have a buyer's agent, they're probably going to have to pay the most to get it, which is what it is. Then there's, I guess, mortgage brokers flogging real estate. And, this is pretty rife at the moment. I think, because we've come out of high interest rates, you've got mortgage brokers doing sort of pay your home off, loan off strategies. To pay your home off, one of the best ways to do that is to buy investment properties, take the rent from the investment properties, and put it onto your home loan mortgage. Mortgage is calculated daily, so it effectively lowers the amount you have to pay back daily and reduces, your overall interest and can pay off your home a little bit quicker. The mortgage brokers that do that, though, quite often then go and find brand new property, which is way overpriced. The typical quintessential off the plan you don't want to buy, and tag people on that. And that becomes the investment sort of philosophy. And again, could AI absolutely find a better property than what I just suggested through the mortgage broker models that are out there? Obviously, mortgage brokers don't make a lot out of, doing a home loan these days. So they all end up getting a real estate license and having this kind of model where they, try and sort of impress investors that way. I think AI can beat that model. I don't think that's a very, very good model whatsoever. At all. And certainly then there's, I guess, the spruikers out there that kind of shove C-grade investments in new construction in the middle of nowhere to people. And I think AI could probably beat that model as well. So could AI beat me? Yes, I think down the track it potentially could. For now, though, I've got a pretty good knack at picking some winners, some investments out in the marketplace, which, tend to be fairly A-grade and fairly desirable in really good pockets. So I don't know, but I think down the track, AI might be one of the best ways to put your foot on a property. But I don't think it's going to get there for another decade, but eventually it may actually get there where, the data it provides is irrefutable, and it may actually link to the price things that get sold by. So there's something to think about. I don't know if we cracked the code on real estate AI, but that's the show today. I need to go. Yes, I have an appointment in the next 6 minutes that I have to prepare for. But hey, folks, thanks for that. I enjoyed today's show. I enjoyed talking about it, but I'll stop there. See you next week. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.